Is it too late now to invest in gold? I've had others say, oh, I've missed the boat. I should have listened to you a couple of years ago. Is it too late at this stage?
No, not at all. I mean, I'd say that you certainly haven't missed the boat. Having said that, you probably haven't got the best seat on the boat either. But no, the boat is still there. But I think you need to sort of join it reasonably soon. What happened to me, which was just literally life-changing, and you make 50, 60, 70 times your money, but it's super high risk. And I actually had to sell because I found it too stressful to buy it, because I was literally making or losing a Ferrari in an evening. I couldn't handle it, so I sold out. But that stock went from about 13.5 cents to about $10. So you need a pretty strong stomach to sort of stay on that ride. I put an offer out yesterday that you could have your money back if you didn't get at least 10.9% a year. And I put 2 portfolios out using the system to road test it. I've done this a few times, but the last time I did it was 31 and 34%. I did it before then, and that's a lot higher than that.
That's annual return, 31, 34%.
Yeah, no, that's less than 3 months. So,
Wow.
And that's against the gold price that's gone up about 15%.
Hello and welcome to MoneyMagpie Invest. I'm Jasmine Birtles, the founder of MoneyMagpie.com. And before we get into the podcast, I have to say anything that's said today should not be taken as financial advice. It's financial information only. I always have to remind myself to say that, but it's true. And also, don't forget to subscribe, follow us, comment. I always look at the comments and I do reply to them. And tell all your friends how fabulous we are, because you know you want to. Now, I am joined today by Simon Popple, who runs the Gold program, which teaches you how to invest in gold. Hello, Simon.
Hi, great to be here.
Simon, I asked you to come on the podcast because there are a few questions that I keep getting asked at the moment. And the first one, which a few friends and other people have said to me, is it too late now to invest in gold? I've had others say, oh, I've missed the boat. I should have listened to you a couple of years ago. Is it too late at this stage?
No, not at all. I mean, I'd say that you certainly haven't missed the boat. Having said that, you probably haven't got the best seat on the boat either. But no, the boat is still there. But I think you need to sort of join it reasonably soon. And, not just because of the gold price, but gold equities. And I think there's a lot of drivers, which I can get into later, which are behind the gold price, which could, lead to it, going up significantly, even from these, what are considered elevated levels.
Because in all honesty, it seems to me, and it does depend who you speak to, but it feels to me like although gold has been going up pretty vertiginously in the last year or so, it feels like there's quite a lot more to go, actually. I mean, really a lot more to go. That it feels like it's just getting started. Not just it's going to go up a little bit more, but it potentially could go up 10x, 20x, all sorts, really. The sky's the limit.
Absolutely. I mean, for those who like charts, we've got one showing, the gold boom in the 1970s. And, as that's... as you can see, we're some way off that. And so, with the red line, the boom is the gold line. And, we're a long way off that. And also, if you look at the equities on the Barron's Index, again, gold line is the previous boom, where the red line. It's a long way off, where it could go. And, talking about the drivers of the price, for me, it's market uncertainty, interest rates, debt, and inflation. I refer to them as MIDI because it helps me remember them. But, loads of market uncertainty with tariffs and things like that. interest rates lower is good for gold. There's a lot of pressure on them coming down. Debt doesn't seem to be coming down anytime soon. It's getting worse and worse. And then inflation, that's something that I think we're all feeling at the moment. And in terms of investing for the future, I think people ought to have a little bit of gold in their portfolio.
It does. You've mentioned the 70s, and it does feel in so many ways like we're going back to the 70s. As you say, there's the inflation, there's debt, a Labour government. And we hear a lot about how the Labour government in the 90s caused problems. But I was talking to Alistair MacLeod recently, and he said that he feels that we are pretty much at the same stage that we were at in 1929. Where do you feel that we're at?
Well, I mean, I actually think it's worse in the 70s, because in the 70s we had the housing stock to sell to reduce the debt, and obviously we've already sold that. And there's talk of crypto and things like that, and I think that's one of the things that's actually driving the price, if I'm honest, because I think that crypto and gold are in probably the speculation bucket for a lot of people, and the returns from crypto have been fantastic. But I think gold is viewed as more of a safe haven asset, and I think that a lot of people are probably taking their money off the table with tech and crypto and things like that, and putting it into gold, and it's obviously causing a spike in the price.
So, what do you think is going to happen next politically? Because it feels to me, and a number of people that I've interviewed, that we're going towards a crash. When I say politically, I really mean politically and economically. Do you feel that there's a crash coming? I mean, people have been saying it for a couple of decades, to be honest, but that they're getting those voices are getting louder at the moment. Do you feel that that's on its way?
Yeah, I mean, it's difficult to say, because a crash from where we are would just be catastrophic. And I think that people have learned from previous crashes how to avoid them. We've had QE, money printing, things like that. And I think that if there was a situation where stocks started to come down significantly, I think you'd probably find government stepped in as buyer of last resort for a lot of stocks. But it certainly makes me uneasy. And one of the things I like about gold is you can't print it. And whereas with companies and bonds and a lot of these other things, you can sort of print them. And so the fact you can't print gold and other commodities for that matter, I think that means that they could do very, very well. And you only have to look at central bank activity. Central banks have been buying a lot of gold, and there has to be a reason behind that.
Well, that's what I was thinking about that, because, as you say, central banks are now holding more gold than they're holding dollars, from what I hear. And do you think that's going to continue, this plan of hoarding more and more gold in China, in Russia, in the Middle East, not in Britain, weirdly enough?
Yeah, I mean, I think there's definitely a sort of de-dollarization, so to speak, and people are looking to have a broader sort of array of investments. And I think one of the beauties of gold is it's fairly currency agnostic. It's one of the true global assets. You can take gold anywhere in the world, and people are like, yeah, that's gold. And even though we talk about it in our everyday language, they've been as good as gold. I don't want them to marry a gold digger. I want to win the gold medal, all that kind of stuff. And it's quite often, I talk to people and say, they talk about all this, golden years, everything. And you say, well, do you have any? And they're like, well, no. And it's crazy. I just don't understand it.
So in your gold program, in your teaching, essentially the course in how to invest in gold properly, what do you teach people? Because as far as I'm concerned, I'm very much a buy and hold kind of a person. I've got my gold. I'll keep it, thank you, until I get to the point where I really think it's time to sell, and then I'll probably sell, half of it. But you actually teach trading in gold, I think, don't you?
Well, not so much trading. I mean, what I do is I teach people how to put a portfolio together. So I teach them, to get some physical gold, to get a fund, and then I use a fancy football format to explain things. So, basically you have a goalkeeper, defenders, midfielders, and forwards. Forwards are your out and out explorers. Midfielders are probably new to production. Defenders are established producers, and your goalkeeper is a multinational. So basically, what I'm doing is I'm kind of teaching people how to put a portfolio together. And the whole idea of this really is, it's your kind of philosophy. You put it together. You're essentially a football manager, so you have a few subs, and you may want to tweak it once a year like you would a football squad, but you don't. Once you've got it, you don't have to do a huge amount. You just sort of sit there and and watch it. And I mean, I think one of the beauties of gold and these companies is they're incredibly liquid. So probably with the exception of forwards, which tend to be sort of smaller companies, so they're more difficult to sell in a tough market. But everything else, you could sell it within 24 hours. And
What do you mean by these small companies? Because I mean, we're talking gold, so obviously, there's gold bullion, there's gold sovereigns, but what are the companies? Are you talking gold miners or what?
Yeah, I'm talking gold miners. I mean, I'm talking about explorers. So, it's another big misconception people have, that they invest in a gold company and they say, "Oh, I've got exposure to gold," but there are lots of different types of companies, and that's one of the things I teach people. Have a call with them and explain the differences, but it's really important people understand that. And and if you've got a company that's in production, that's completely different to a company that's exploring. And the explorers tend to have, I have market values of less than $1 billion, but they can be as little as 10, 20, 30 million. And if you've got a company like that, it can be great if it's doing well, but if it's doing badly, they are less liquid to sell, because it's willing buyer, willing seller. But
I'm assuming, sorry to butt in, but I'm just thinking at the moment, I'm assuming that miners generally, gold miners particularly, are doing well because of the price of gold. So I would have thought more investors would be more lenient, if you like, because mining is a very difficult job. There are geopolitical risks, there's all sorts of problems. And as you say, even exploring, you haven't even got it there yet. You're still in the exploring stage. And when gold is going down, I'm sure there's a lot of frustration from investors. But when it's going up, I would guess that investors, and generally, particularly the institutional ones, are probably giving them a bit of slack. Is that the case?
I think that's right. It's not dissimilar to property, to be honest. Where if you're selling property in a rising market, it's quite easy. But if you're selling it in a falling market, it can be terribly difficult. But no, you're absolutely right. I mean, with the beauty of this is certainly larger companies, they tend to produce more than one commodity. So they might predominantly be producing gold, but they may have a bit of silver, a bit of zinc, a bit of copper, whatever it is. And it's one of the things I love about this is you can invest in a company that is 60%, 70% gold. So you've got a lot of exposure to the gold price. But if the gold price corrects a bit, you've still got exposure to silver, copper, whatever else it is. And so you don't have all your eggs in one basket. So you're not only diversified by different types of company, but you've got different countries, you've got different currencies, and there's with a relatively small portfolio of sort of 13, 14 investments, you can get a hell of a lot of diversification.
Hi, I'm going to quickly interrupt this amazing podcast to let you know that MoneyMagpie Invest has a bi-weekly newsletter where we share tips, tricks and insights to help you become a more confident investor. Our newsletter is completely free to sign up to, and it will arrive in your inbox on Saturdays at 12:30 p.m. As well as all of the super useful investing information, we also share exclusive deals from our partners. So if you're serious about building long-term wealth for yourself, I really recommend signing up. And you can find the link in the description of this podcast.
And yeah, so diversification is really important, but so is return. What sort of returns are you getting on your system at the moment?
Yeah, I mean, my system, I put an offer out yesterday that you could have your money back if you didn't get at least 10.9% a year. And
Annually?
I put two portfolios out using the system uh, to road test it. I've done this a few times, but the last time I did it was 31 and 34%. I did it before then, and that's a lot higher than that.
That's
But
annually. Annual return, 31, 34%.
yeah, no, that's less than 3 months. So, um,
Wow.
uh, and that's against a gold price that's gone up about 15%.
Mhm.
Now, on average, the gold price has gone up 10 point. It's over 10.6%. I would like to say 10.9, but it kind of moves around a bit. But since 2000, in sterling terms, it's gone up over 10.6, and I think it's there was some analysis I saw from In Gold We Trust, which is a sort of well-known name that in the market, that it was 10.9 back in, I think it was May time. But yeah, I mean, somewhere between 10.5 and 11 a year over the last 25 years as an average annual return is not bad.
No, not bad at all. So what does your system involve? Is it sort of some buying and selling? Do you tell people, oh, buy this, sell that, that kind of thing?
No, I mean, I try and keep it really simple. And, what I do is I tell people, first of all, what kind of investor are you? Are you a high risk, low risk, medium risk? And then I give them a list of companies and funds to choose from. But rather than just like, choose some of these, I sort of say, look, these are the criteria, this size of company you want for this position, um, you know, pick, perhaps some Australian ones, some Canadian ones, some US ones. And the whole idea is that the team, the squad, call it what you want, performs well. And that's why I use fantasy football format, because you've got different players, which are your companies. But at the
Yeah.
end of the season, it's you don't you say Man U won the league, or Arsenal, or Liverpool, or whatever it is. You probably know two or three of the players, but you don't know all of them. And it's the same with investing. You put a team together, and they have to work well. So you don't want to have a team which is full of Canadian companies, for example, or full of US or full of Australian. You want to have a mixture of both, and that's the kind of the essence of investing, where I want people to have a bit of both, well, a bit of everything. And what you tend to find is if there was, let's say, something horrific happened in Australia, um, whilst you would expect those share prices of those companies to go down the toilet, you probably find the ones in the US and Canada shoot up because of what happened in Australia, and the same happens elsewhere in the world. So you kind of want to have a balance, and not have all your eggs in one basket. Be diversified, have different commodities, different currencies, different countries, different companies. Different companies at different stages. There's lots of ways you can kind of play around with it, and you can actually have a bit of fun with it. I mean, the forwards, if they come off, it can be just life changing. One happened to me, which was just literally life changing, and you make 50, 60, 70 times your money, but it's super high risk. And I actually had to sell because I found it too stressful to buy it, because I was literally making or losing a Ferrari in an evening. I couldn't handle it, so I sold out. But that stock went from about 13.5 cents to about $10. So you need a pretty strong stomach to sort of stay on that ride.
You
But
really do.
yeah, no,
But
I mean, it's a lot of fun. You don't have all your eggs in one basket, and the whole idea is that you build a portfolio, and you forget about it.
Yeah, that's what I like. I really don't like the idea of spending all your time watching bips on a screen. It's not fun. So if you can, as you say, do a little bit of argy-bargy and a bit of selling, bit of buying, then leave it, forget about it. That's great. I enjoy that. I mean, you mentioned property, and in the back of my mind is the fact, as you say, that property has gone up extraordinarily in the last 40 years, but I think we've come to pretty much a juddering halt there. But gold has been holding its value since Roman times, hasn't it?
Yeah, I mean, gold is interesting stat is in 1920 you could have bought the average house in the US. I've got numbers for the UK as well. I don't have them in my head, but US it would cost you 305 ounces of gold to buy your average house in the US in 1920. In 2025, it would have cost you 140 ounces to buy your average house. So in this year, if you kept your 305 ounces of gold, you could have actually bought two houses and had 25 ounces of gold left. And that's using a much lower gold price than where we're at today. So gold has been incredibly good at holding value. And I mean, obviously the gold price goes up and down. But I think if you're prepared to hold it for the sort of medium to long term, I think you could you could do very well.
So I'm just thinking, so against the stock market as well, because stock market's done well, but it must be very similar with what gold would buy in terms of stocks. Although it's hard, frankly, to find stocks that were around in 1920s, even in the 1970s, that are still around today. Ford maybe, but I guess it would be the same.
It's very difficult to do the analysis because it's kind of like, because currencies, I mean, I think the dollar's lost about 90% of its value. I don't know what it is, but
Yeah.
I know it's a lot.
Yeah.
So comparing a dollar back then to a dollar today is kind of
Yeah.
is wrong.
Yeah.
And but yeah, I mean, I think that people should have some gold in their portfolio. I mean, I use physical gold for my daughter's school fees, and I think that again, that's the thing I like about gold is you could perhaps have physical gold. I view as almost a proxy for cash because yes, you've got the cost of buying it, but if the price moves up, and you probably pay, I don't know, 3-4% to buy it. So if the price, once the price has gone up, let's say 7 or 8, 9%, as I say, the average annual return has been over 10.5 since 2000. But once it's gone up above that level, you're kind of in the money. And with most gold dealers, you can sell your gold and literally have the cash in your account within a week. So we're talking about something that's not only good return but sort of incredibly liquid as well. And
Actually, I thought that you were meaning that you actually go to the school and give them a lump of gold. The here are.
no,
I take that. I mean, if I had a bill for you, I'd say you can pay me in gold if you like. Yeah, that's physical gold. That's fine.
I must say, I think the school would probably not know what to do with the gold. But I mean, it's certainly, if I'm particularly like it for my pension, to be honest, because pension is long-term money, and having something that's got a track record in difficult times, I like that. It gives me that sort of warm feeling that if the stock market crashes or the pound goes down or whatever it is, I've got something, and you can actually have gold bullion. There's certain rules about purity and stuff in your pension, and so if you've got that, you've got a bit of gold in your pension. You'll never see it, but it's just nice to know you've got it.
How do you do that? That I assume is within a SIP. So if you've got a SIP, you can buy some gold through.
With SIP and SAS, you need to speak to your provider. But what tends to happen is you have to fill out a form with a dealer, and your SIP provider or SAS provider can actually fill out most of it. But you obviously have to sign it, and then off you go and buy the gold and you put it in your pension. But yeah, you need to speak to your SIP or SAS provider to make sure that they've got the facility to do it.
So your gold program, how much does it cost? And do you do it every year? Is it an annual fee?
No, I don't do an annual fee. I charge $395 to do it, and with
That's
that,
it.
people just they get the list. I show them how to do it, and off they go. So I'd love to charge them each year, but the whole idea is that you don't need me after you've got your portfolio, and I try and keep it simple. I've written a book as well, which really kind of talks about it. So if you don't want the list and you don't want the sort of chat with me and things like that, you could always buy the book. But the whole idea really is to set people on the journey to invest in gold.
What's the book called?
It's called The Beginner's Guide to Investing in Gold.
All right. Well, it does what
So
it says.
it does exactly what it says on the tin, kind of thing.
But if you want proper instruction, it's a good idea to join the gold program, and we've got a link below which you can click on, and you can get to the gold program and start to make really good returns. And to be brutally honest, I'm going to have a go myself, because I'd like good returns, particularly in this high inflationary time, because I keep saying 3.8% is a work of fiction when it comes to inflation. I mean, my inflation, I'm sure, is more like 10% at least. So if we're going to survive, we're going to make some money, and particularly for the long term, we need to have these higher returns that you're offering, Simon.
Yeah, no, absolutely. And I mean, I'm happy to offer a discount to your listeners who if they enter the code, and we can hopefully make them a bit of money.
That would be good. Simon, thank you so much for joining me. Simon Popple here, who runs the Gold program, which gives you really good returns so far. And of course, as I said, nothing that has been said today should be considered as financial advice. It's financial information only. You go and have a look at it and make up your own mind. But Simon Popple has this system that he sells through the Gold program, which should make people really good returns. So this has been the MoneyMagpie Invest podcast. I've been Jasmine Birtles. We do this every week, so join me next week when we'll have yet more exciting ways for you to make money with your investments. See you then.